Yo, morning. Sorry for the wait, for the late start to the stream. I got home pretty late last night, and it's no excuse, but yeah, I don't know why I haven't been waking up to my alarm, but here I am today. You know, what matters is that I actually made it. What the heck? Where's all my indicators at? Oh, there we go. Well, I thought I lost my freaking indicators for a second. What? That would be bad. Okay, so what I did notice in price here right now is PPI numbers actually took us higher, and it appears that we have completely rebalanced this weekly fair value gap here. So I would like to trade intraday models and wait for an intraday reaction, but if we continue to be bullish like this and completely disrespect this weekly fair value gap. A complete disrespect is when we have a closure above this weekly fair value gap on the weekly time frame. But it just depends on how we close this week on this weekly candle. We could continue higher, or we could continue lower. I'm just trading intraday models, so I'm targeting maybe hourly highs, session highs or lows, and whatnot. But just based on what we're doing right now, it looks like we are disrespecting this weekly fair value gap, and we're probably going to attack, August 1st high of day. So August 1st high of day could be the drop liquidity coming into this morning. Just purely based on how we are closing here on the 8 hour and the 4 hour, it appears that we will attack their respective highs. And let's see on the 15-minute time frame. On the 15-minute time frame, depending on how we close here, would tell me if we refer back to this 15-minute fair value gap here. So like I said before, based on the 4 hour, based on the 1 hour, based on the 8 hour, I can anticipate for higher prices, but we still need an entry model to attack that idea. Oh shoot, whoops, you guys can't even see my screen, my bad. What I mean by 1 hour, so this is the 8 hour candle right here, here's the 4 hour, and based on this 1 hour candle closure right here, if we were closed right now, I would anticipate for us to take out this high right here. So notice how it's in alignment with the 8 hour and the 4 hour, the 1 hour. It's also in alignment with the 15-minute and the 30-minute. However, depending on how we close here on the 15-minute time frame, will tell me if we retrace back inside this 15-minute fair value gap, or we'll leave. We'll treat that 15-minute fair value gap as a breakaway gap. So we still have a lot of time left in this candle, so do something real quick. But yeah, like I said, we still have about 10 minutes till the 1 hour and the 4 hour candle closure in the hour as well. And yeah, just wait on how we close there and watch what we do. See, so like based on, so like if we were to close on this 1 hour candle right now, I could anticipate for us to take out, you know, I could anticipate for us to leave this hourly FEG as a breakaway gap, and I want to see prices take out, you know, this hourly high first. So same thing, with same idea here too with this 15 minute. If we were to close exactly on the spot right now, but yeah, we still haven't exactly closed completely yet, so we'll see. Oh wow, this would have been an entry. Well, actually, would that have actually? I'm not too sure. Oh, we retrace back inside a 30-minute fair value gap here. Oh yeah, that would have been an entry. This creation of a bearish 15-minute power of 3, based on how we closed there, yeah, that would have been an entry. But on yesterday's price action, we just consolidated basically. Went up, attacked the highs, and then just consolidated throughout the day. Yesterday's PA was one for the books for sure. Alright, I have about 5 minutes left till the candle's closure, 15-minute candle closure. I have my SFT charts pulled up right here. I do want to take a look at Dixie. Okay, so dollar has been extremely weird. Dollar has been really weird. We get these drops and immediately get repriced back up. Like drop, immediately get priced up. I don't even know what the reasoning for this is. There's no news here at this time, but like it's so weird. Drop, take out that liquidity and just instantly price up. Drop and then price back up, and now we're starting to get the sell-off. It's so strange. Very, very strange. What's occurring here on the dollar? But with the dollar going lower, however, this makes any price moves ups on the indices a little bit, low resistance. About 5 more minutes left till we have this candle closure. We do have this 5-minute fair value gap here, so just watch how we trade there, to be honest, because we could actually use, like, if we get a bullish 15-minute candle closure, I would probably elect to use this 5-minute fair value gap as an entry model, but it's still too early yet because we still have 5 minutes left in the 15-minute candle's closure. And like I said, if we don't close bearish here on the 15-minute, it will probably suggest the idea that we probably will retrace back inside this 15-minute fair value gap or something like that. But yeah, like I said, I do want to see us treat this 1 hour fair value gap as a breakaway gap. In about 4 minutes if we close, because I want to see us take out this hourly candle's high first before we take out the low. And we have confluence, we have a draw of liquidity, which is August 1st high of day. I'll leave that there at 11. And yeah, so let's go over the risk management here for today. So the risk management plan for today is, it's gonna be, I'm gonna be trading normally here. They're not really like, it's not NFP or anything like that, where prices could be, you know, highly manipulative. PPI doesn't tend to have those attributes, and yeah, I would just be trading normally. Micros, like as always. Sorry, my nose is super stuffed. So, you guys can take a look at the numbers here yourself. But, basically, you know, if I were to take this first trade today here to target, you know, that hourly high, the 15-minute high, whatever. So all those time frames, like I said, the 15-minute, the 30-minute, the 1 hour, the 4 hour, and the 8 hour. If I were to take that a trade to target those highs right now, it would be depending on the risk to reward. If it's a 1-to-1, then it'd be $480 plus 20%, and then it'll be $720 if it's a 1 to 1.5 risk to reward. So yeah, depending here on how we close here on this 1 minute, we'll suggest the idea of I'm gonna probably take a long on the 1 minute to target the 15-minute high, but like I said, it depends on how we close here. Like, will we get a retracement back inside this 5-minute fair value gap? Yeah, I'm risk that. So here I'm entering this based on the idea of us taking out this 15-minute high before we retrace back inside this 15-minute fair value gap. So I'll actually take the entry at the 1 minute, 15 cons here to target that 15-minute high, the 1 hour high, the 30-minute high, because I'm treating this 15-minute fair value gap as a breakaway gap. I have my stop loss set right below the consequent encroachment of the 5-minute fair value gap here. So there's that. Okay, so we just took out 15-minute high, and like I said, there's no entry model. My entry model here, like I said before, would have been that 1 minute fair value gap to target this high. After that, that's when I would have, you know, just moved on, or not really moved on, but moved my stops to break even and then set standard deviation projections, because the nearest, you know, important buy side level we have is this August 1st high day. But after that, that's when I would just elect to sit on the sidelines now and see what we do. But yeah, if you guys were able to see what I was basically targeting, because like I said, there's time frame alignment with this trade. There's a reason why I believe we shouldn't retrace back inside this fair value gap. Yeah, that's the trade there. But I didn't, like I said, I wasn't able to take part of it. So back to the risk management part. So like I said, my first trade, it's either $480 or $720, depending on if it's a 1-to-1 or 1 to 1.5 risk to reward. Second trade, so let's say I win my first trade, right? And I make $500 my first trade. My second trade, I'll be risking half of those profits. So I would have risked maybe $250 for the second trade if I win my first trade. But if I lose my first trade, then I'll risk $240 maximum. If it's a 1-to-1 risk to reward on my second trade, but if it's a 1 to 1.5 or higher risk to reward, then I'll be risking $320 as my maximum stop loss if it's my second trade of the day. And third trade, same thing. If I win my second trade, let's say I make $300 my second trade, then my first trade I'll be risking $150, right? Because it's half of the profits I made my second trade. And if I lose my second trade, right, $120 is my maximum stop loss if my risk to reward is a 1-to-1. If my risk to reward is a 1 to 1.5 and it's my third trade, then $160 is my maximum stop loss. So those are the numbers essentially for the trade style that I trade with. I can't take any models that's below a 1-to-1 risk to reward. So let's say I can never take a model that has the outlines of making 50 cents and I'm risking $1. That's just that's just not how I trade. And my risk to reward should be set to where I take my first partial. So here, like on example, even though I can see us taking out August 1st high of day and it could have been my terminus, my first partial, the model will always be set to where I first take my, so I take my entry here, my model will always be set to where that first partial is, not here, because I'm not taking my first partial at the August 1st high. Even though it's the terminus, I'm not, this is not what I'm referring back to here, right? So the model would have looked something like this, essentially, something like that. Alright, and whenever I do take a partial here, my very first partial, I'll always take off half positions, take off half of my positions, and then I move my stops to break even. So for example, if I had a original position size of 20, I'll take off 10 contracts at my first partial, and then I'll move my stops to break even, and then my next, take profit, I would have, taken off 5. And yeah, that's that for the risk management part of the stream. And next is, I do want to go over the pros and cons here, because we don't really have much to do in price now. If we are given an opportunity to enter, then I'll enter, but now we're just here to watch. So the pros and cons. Not bad. I'm not tired. So the pros and cons for this week are, or actually I'll just say the improvements, because there's really no need for me to do the pros and cons, because the improvements are actually straight from the pros and cons. So improvements this week, before I even take a look at the charts, I must have my funded linked and ready to enter a trade. Ready, my trade of 8 is ready. Pay more attention to SMT. I have my SMT charts here up above, and I'm ready to go. 3, I'm going to be more selective on the trades I take. So every single trade I'm going to take is going to be, A+ quality, A quality setups. I'm never going to take a 15-minute power of 3, and I don't have the reason why we created that power of 3. Or, all these trades will be an A+ and above type of setups. I'm going to always be reviewing my A+ setups before my trading day, so I'll do that right after this actually. And I'm going to be trading heavier size, so I'm going to be trading 20% more than what I usually risk. Incorporate standard deviations as targets. I'm going to do that whenever I do actually enter a trade. I'll set up my standard deviations and then take off partials at every standard deviation. So here, preferably 1 contract, okay. And I'll start recapping how my emotions were in a trade. So not only am I going to be recapping, my technicals, like here yesterday, but I'm going to be recapping my mental state as well. And I do believe everything here that I have in set for myself will actually benefit me for the better. And yeah, those are my pros and cons. And let's go over the A+ setups. So what makes an A+ setup an A+ setup? Oh, this is not where I wanted to go. This is where I wanted to go. Why day trading strategy? So what makes it A+ setup? A+ setup. Well, I can answer the question, why did we create this power of 3? This is an example of why we created the power of 3. So notice how we have this, bullish up close candle here on the 15-minute time frame. Why did we create that bullish up close candle? Well, we just came into a 15-minute fair value gap and noticed how we respected the consequent encroachment of the fair value gap. That suggests the idea of bullishness, and that answers the question, why did we create that bullish power of 3? Time frame alignment. If there's time frame alignment between multiple time frames, like the trade that I was going to probably take today, how there was time frame alignment between the 15-minute, the 30-minute, the 1 hour, the 4 hour, and the 8 hour. Time frame alignment is a key aspect on how I trade. And yeah, if there's multiple alignments between the time frames, that just gives my trade setup like extra confluences. Third aspect is that I'm always going to be buying below the opening price and selling above the opening price, whether the opening price is depending on if the opening price is an hourly, opening price 4 hour daily opening price, weekly, it depends on the model. And if the lower time frame model is aligned with the higher time frame objective. So here we have previous month's high as a draw of liquidity, right? We had on the lower time frames, we have a bullish model that's in confluence with each other. If you know, previous month's high is the draw of liquidity, that's the higher time frame draw. We also have an internal model that is in confluence with the external model. And yeah, those are the things that make up an A+ setup. Some trade models here were here, like we had a reaction to this 15-minute fair value gap. It's in confluence with the 30-minute time frame. Higher time frame we have Oh, okay. Cảm ơn má. On the 15-minute time frame here, had that reaction. Like I said, internal model is in alignment with the external model. On the lower time frames, there's a 2-minute fair value gap that gets created once we, displaced away from this 15-minute fair value gap. Once we displace away from this 15-minute fair value gap, and whenever prices opens up at 11:45, we leave this 15-minute high intact. We retrace back inside this 2-minute fair value gap, and then we take out 15-minute high, 30-minute high, and then we ended up completing our higher time frame draw. So this A+, like this is everything I would want in a setup. I understand the reason why we created a power of 3. We came off of a key level. Internal matches the external draw of liquidity. I'm buying below a market open. I understand clearly what my draw of liquidity is. It's just, these confluences allows me to see what I want to see. Here, there's another example here. We completely disrespect this hourly CIBI here by getting a complete closure above this CIBI. So on the 1 hour time frame, we close above a 1 hour CIBI. We have this bullish candle closure here in the hourly time frame, and previous day draw is the clear draw of liquidity. So on the lower time frames, 15-minute time frame, we can get even more understanding. So based on how we close here on the 15-minute time frame, I'm going to treat this 15-minute fair value gap as a breakaway gap, same as the 30-minute time frame. I want to see us take out the high first, the 15-minute high, before retracing back inside the 15-minute fair value gap. So I'm going into the trading this breakaway gap as a 15-minute fair value gap as a breakaway gap. And we have time frame alignment. 15-minute aligns with the 30-minute, aligns with the 1 hour. And internal matches external. On the 5-minute, we have a 5-minute fair value gap. Prices retraces back into it. I take my entry and I'm targeting previous day high and that 15-minute, 30-minute, and 1 hour high. You can see it clear here, but at the 11 o'clock open, we price right into the 5-minute fair value gap. We take out the previous day high almost instantly, and we price actually a little bit higher after that. And I was able to hold fold, take profit to all my standard deviations. And yeah, that's gonna be all the A+ setups that I'm gonna be reviewing with you guys. I'm gonna complete all of them this week's seminar on my Discord channel. So if you guys want to check it out, my Discord link is in my bio. And yeah, let me check off that. So we don't really have any news now left after PPI, so that was all that there was to this morning, I'll be playing some chess. So if you guys want to stick around, you guys can. You guys can even help me out. Let me see if I can get my YouTube comments linked to the stream here. We have ICT is actually live streaming right now. I haven't been able to hop on to his live stream, but if he does live stream tomorrow, I probably will be on the live stream with him tomorrow, and not live streaming for myself. So yeah. Is that Peter? No one's watching the stream, so, or no one's, I guess there's no comments, so there's no need for me to have comments. I am a trader first before I'm a streamer. I am a trader first before I am a content creator. However, I'm a person that practices patience, confidence, conviction, and analytical thinking first before I'm a trader. Chess allows me to be an analytical thinker, you know. It allows my brain to, you know, really function, I guess. But I've played this opening so many times now. This knight could go here. Or he could just move up his pawn, actually, and have the queen defend it. This position, I played it a couple of times. I could move my bishop here, prevent this, you know, pawn from coming up. So that was the move that he decided to go with. I'm gonna do something like this, actually, and then here. If he goes here, then I take, he took. Queen side is basically completely finished, developing. If he takes, I take, and then I take here, or I take here. Actually, I'm just gonna take because I don't really have much of an option. Yeah, he goes here, and then. I think I might go here and then here, and then develop my knight. Here like that. Pretty solid position for me, to be honest. I could actually kick out his bishop here too, but so we create this pyramid of if he takes, then I just go here. Yeah. I go here, he takes, and then I take. Bishop's attack, protecting that line. Oh, he's actually messing up his position here if he does that. He goes here, now I'm chilling. Here, so but now then I have to go like this. I go here, here, and then here. Here, so here, here. Here, I go here, and then here. Actually, here, here, and then here. Pieces are still pretty basically chilling right now. He could castle. He could move his knight. This queen isn't doing anything. I have this pawn's protected by this queen. I could actually go here too. I actually might do this. I feel like this is probably the stronger line of attack, where I just kind of force. Yeah, I think this is probably the take here and then I go here. But if he just scooches up, then I just take his knight. He has to take. Takes, and then I take here. Okay. Can you take like that? My pawn structure is a little bit effed up, but that's fine. Continue to watch here. We have this big displacement move up, so you know, there's no entry models here for me, so just continuing to wait for, you know, some sort of retracement or anything like that. Now I'm attacking that. This knight here, this pawn. I need to get my knight actually active though. Technically he is, well, I have this, you know, barricade of pawns that I formed. If he moves his knight like this, I can move my rook here, attack this pawn. I go here and then he goes here. Get this pawn isolated. Oh, well, he could have done that too, I guess. Now is when I start moving my knight. Connect my bishops. If he moves his pawn here, actually, I have no spots for me to go. I'm actually chilling like that now. Just continuing to, you know, knight around. Do my knight thing. I go here, attacking the king. But I'm not really attacking anything else, so that's fine. I would do that all the time. That trade is now I'm still in a better position. I still have this line open. Yeah. Just attacking this spot. Attacking this pawn here. this is probably the best decision here. Because he can't go here, here. He can't go here, here. Here. He can't go here. Or here. Well, actually, the moves he can't go is here, here. Yeah, that's it for his knight. If I move up this pawn, then I'm attacking this knight. Interesting. Interesting move. Oh, yeah. Where does he go? This way? New trades, that's a good trade for me. And then I still need to get this barricade of pawns. I go here. I need to get these pawns up like that. Connect these pawns. He goes here and I just, yeah, I just gotta just. Give him a check. He'll probably most likely go here. What is he doing? Well, he lost. Oh shoot, did I just troll? Oh, I didn't troll. What the heck am I supposed to do here? Yo. Oh, I feel like I could have played that endgame so much better. Oh my gosh. I feel like I could have played that so much. Bruh. Oh, bro, I feel like I could have played that so much better. It's okay. Gotta put on some shorts, bro. I'll be right back. I'm gonna get some food. Someone wake up. Let's see how we close here. So we have, let's mark out this 30-minute fair value gap. 30M. I want to see if we can get a bullish candle closure here after coming into this biscuit now. We're having that strong reaction to the 30-minute fair value gap right now. Let's see if we can create some sort of, PDO rate to enter off of. Let's do another 10-minute. I actually played this line here. I take, and then he takes here. That's where I'm like, here. Now I get that check. We don't really have a PD array and the lower time frames here. No entry model. I suppose that. I go here, I take, he takes then. I had a feeling that he was going to do that. It's made right. Does not allow that. I really don't like how there's no. I might think if it's like. There you go. Yeah, there's no entry pattern here for me. I need to get. What? Oh no, I go here and then. Oh, that was actually a good move because it's still check. That move right there was very clean. But now I can't let him, he's not gonna be threatening me anymore. Yeah, based on this 15-minute candle closure here, I can anticipate for us to take out this candle's high. Why did we create this bullish 15-minute power of 3 here? Well, we traded back inside a 15-minute fair value gap and a 30-minute fair value gap. And we just took out that 15-minute high. So here stops would have been moved to break even. Just like that. Model. I have my links or my horse are linked together right now. I couldn't have gone here because it's first. Still protecting. So there's an expansion higher right now, away from the 30-minute fair value gap. I forgot to note out 10 o'clock open actually. Oh, I actually could have gone here. This would have been the better move, actually. Well, you live and you learn, you know? I have to get this pawn up to create that fortress. This isn't a bad game that I'm playing right now, actually. I'm playing a pretty solid, decent game. Wait. I was like, wait, why did he not take that? This guy thought he had me. I'm gonna go here actually. Here and then five more minutes or 10 more minutes left, almost, for this closure. So based on how we close here would determine if I can, use a 10-minute or 5-minute here. Well, they're actually essentially, I think, the same thing, right? Oh, they're basically the same thing. Okay. What? Okay. Well, that was a massive blunder. That was actually such a massive blunder. Now I can get my offense up. Pick up my offense. I'm actually chilling, actually. Okay, well, I just... I think I'm chilling here, actually. Okay. I have my freaking this strong attack here. This entire move. Yeah, I'm actually so strong right now. Very, very strong. So we have 30-minute hourly. Treat this as a breakaway gap here. I'm gonna treat going into this trade as if this hourly fair value gap is going to be a breakaway gap. That's a breakaway gap. Not entirely sure what he's trying to do here, but so now I'm attacking that. So if he takes, or he actually has to he has to take. Well, I'm down to trade. Nothing wrong with trading ever. Oh wait. He takes, I take. Oh shoot. Oh. Oh my goodness. That was a freaking fat blunder. That was almost like, I almost costed us the game there, actually. Holy yikers. It's crazy. Crazy how the tides of the game could have turned just like that. Bro. Don't tell me you just... No, you can't do that. Well, he's about to lose the time. GG's. GG's, homie. Yeah, here, based on this 15-minute power of 3, I'm gonna probably like to take this long to target August 1st high as a higher time frame external draw. And, you know, so let's say I were to enter here, right? My stop loss would have to be here. Is there a better way? I have to have my stop. Alright, that's the model right there. That's gonna be the model. So I'm entering this with, how many cons is that gonna be? 14, 13, 12. So it's gonna be 12 contracts. And I'm targeting that 15-minute high. 15-minute high, 30-minute high, hourly high here, and it's in confluence with the higher time frame. So in about, I just have it ready here now. It's a 1-to-1, so risking $1 to make $1. But like I said, this is gonna be my terminus here for the trade. So hoping prices create some sort of, you know, open, low, high, close candle here on this next 15-minute time frame. On this next 15-minute candle. So here's the 11. Buying below the 11 o'clock open. And this is my partial. If prices takes out my partial, then if prices takes out this swing high without giving me an entry, then I just don't take the entry model, and like there's no point in me taking the entry, you know. So it's either prices gives me the retracement or prices takes out the if prices takes out this partial here, then I'm going to close the stream for today. And if it doesn't give me an entry, yeah, I'm just gonna close my stream for today. Very, very simple. The clear draw is just 15-minute high. Can I record and stream at the same time here? Huh, I don't even know. Well, let's just wait and see if prices will give us an entry or not. Yeah, let's see. So we have actually way outside of this, or we're outside of this weekly SIBI now. Interesting, very, very interesting. Just waiting to see if prices will give me an entry or not. So like I said, I'm treating this hourly fair value gap here as a breakaway gap. S&T charts look pretty, you know, not bad. We haven't taken out the high yet on ES. On the 1 minute, yeah, I mean, if prices doesn't give us the retracement, then we don't enter. If prices does, then we enter. It just, if we do something like this here, like if we do something like this, and it doesn't give me my entry, then I don't take the trade. But if it, you know, takes out the partial, like I said before, I can get an entry, then I close my trade, and then I'm gonna turn off the stream and get on with my day, because that's all there is to it. If the setup allows itself, then you take it. If it doesn't, then you don't take it. It's fairly simple. It will be changing right in front of the stream, maybe. Mama! Yes, ma'am. I'll be scary. So like I said, we were not given an entry, so I'm actually going to just turn off the charts there and say thank you guys for watching, and until next time, I'll catch you guys later. Peace out. Boom.